So city finance is a process. They're all linked together and they're all related. And city finance is not just one department. It really is, it takes the team, the city team, to handle and control all of the city's finances. So it is a circular process, and usually we start out with the planning that goes into it, and then we budget it for it based on what we plan. Then we have to keep track of what it is that we're spending and receiving revenues on and how that's tracking to the budget. Then we monitor and report that to a variety of folks. And then what we've reported gets audited. And then there's another final component that we'll talk about tonight, which is the internal controls, which is basically what the city does to ensure the information that we record and what we do is accurate. So the presentation tonight is going to go through each one of these steps. So first we start with financial planning, and that's going to help us understand what do we need and how we're going to pay for it. So why do we plan? Well, there's never enough money to do everything that we want to do. We being the public has their views, each person in the public has their own priorities, council has their priorities, staff has their views on all the things that we want to do for our citizens. So there's not enough money, so what planning does is it helps focus our attention on what are the priorities, what are the goals of the city. It also allows us to be organized for understanding the growth and the development of the city so that things don't grow haphazardly. It promotes efficient operations within the city because we're planned for them. We can look at things ahead of time and make wise choices. It also, planning helps us distribute costs over time. We know we can't do everything all at once, so planning helps us get to those priority things over time. And then also with accurate and full planning, then that's going to help us with our opportunities for grants, because many grants look at the internal controls of an organization that is requesting money. They look at the financial conditions, and they look at whether where that grant opportunity fits into the city's planning process. So how do we create plans? Well, usually we start with the last plan, and then staff looks at where they are, see what's changed, and we add our concepts, we add our knowledge of what's going on, and we revise those plans. And we take into account what we've heard from council and what council's perspectives might be. And public has an opportunity throughout the variety of plans that the city prepares to weigh in and voice their perspectives as well. And then after council has heard staff and the public's perspectives and had a chance to talk, then it's up to council to consider all of that and make the final choices and to go ahead and authorize and adopt the plan. So what kinds of plans does the city have? We have several plans, and they're in a different time horizon. So in concept, it helps us when we start with the highest level plan, the longest look. What do we want to do? And that's the city's comprehensive plan. It takes a 20-year look at a variety of activities throughout the city. It looks at zoning and growth needs and demographic changes to kind of give a long-term idea as to how we might need to reset our resources to accomplish this view of the future. And so to complement that, each of the departments also has their own master plan. And that's kind of their own internal document that, again, usually has public process to it and public input to help give staff and the council views into how these growth plans should work. From those long-term plans, we have an annual process, which is our 6-year capital plan. So each of the areas and each of the departments bring forward their near-term 6-year projects that they would like to see accomplished. Now, over the last 2 years, we've refined our capital planning process by putting some fiscal constraints on there. So now our 6-year capital plan is not really so much as a wish list as it is what we think is a feasible plan that we can accomplish within the next 6 years. Having said that, most of our grant applications require a project to be in the capital plan in order to qualify for grant funding. So to some extent, we do continue to have things that we think may be funded through grants, but are not awarded at the time we do our plan. So there is some speculation in there, and we do have some items in the plan that may not actually occur due to lack of funding over time. So that's on the capital side. In our budgeting process now, we also are taking a longer-term look at our operating activities because we're using a 5-year financial forecast now. And that's allowing us to see and have visibility to the ramifications, the long-term ramifications to the decisions that we make now, largely around certain funding sources by creating new funding sources, and also by helping us manage the number of positions we have and understanding the impacts of the bargaining agreements and how they're going to unfold over time so that we don't overcommit our resources. And then once in context of those longer-term capital and operating plans, we narrow it down and we create our 1-year operating capital budgets. So after we've looked at all of that, after we get our context, we can decide then what do we think that we can actually afford to do and what are our priorities for the very next year. And that's the operating capital budget that we just passed last week. The other part of this whole process is we also, in conjunction with this, look at our debt capacity analysis. And so we do look at our debt in addition to our capital in our operating. And in the city right now, on the operating side, we have a lot of legal capacity because we don't really have a heavy debt load, but we don't have a lot of operating capacity to take on a lot of debt service right now. So that limits how much debt we can practically issue at this point in time. So that was the planning process. And so the next step in the circle is budgeting. We've planned for it. So now we're going to talk a little bit about the budget again. So what's the difference between a plan and a budget? A plan we've just talked about. It helps provide priority and direction. But a budget is actually providing legal authority. It's establishing legal limits under which staff can expend resources. So it carries a lot more authority here, again, in consequences and expectations of performing within the authorized guidelines. Capital and debt spending are generally authorized over the life of the debt or the life of the project. So it has a little bit different time focus than the operating budget, because the other operating budget is basically authorizing spending 1 year at a time. So the capital projects budget, we bring in from the first year of the capital plan. So things that council has approved after going through that public process and saying, okay, these are our priorities. Then we're going to take those and we're going to move them in to the operating budget, which gives people another chance because it's later in the year. Not everything will necessarily stay there. If the funding picture changes, things may be added or deleted between the plan, the original plan, and the time the budget gets adopted. So generally, we're looking at capital as being items that are, projects that are $20,000 or more. And those would include things like new roads, traffic signals, trails, docks, parking lots, buildings, playgrounds. So usually larger ticket items. Items that are larger than $5,000 but are not a repair, we put those small purchases, like we have a Genie lift platform. And those will be purchased through the operating budget as well. They're generally one-time purchases that are smaller in scope. So the capital budgets include real funding. So again, these are generally at this point, by the time we adopt the budget, for the most part, they're really dealing with grants that have already been authorized, debt which has been approved, and we use dedicated capital revenues in order to pay for these capital projects. So in general, we're only using the one-time sales tax is kind of the only source right now that's coming out of the general fund to support capital projects. All the rest of the money is coming from outside fees that are restricted for the purpose of capital. So they're capital by nature, and they're not supposed to be used for operations. And so examples of those are our real estate excise tax, our park levy, our in lieu fees that are related for traffics and parks, and our impact fees. These, by their very nature, are restricted for capital projects. Okay, our operating budget, so this is our annual operating budget now, is our revenues are grouped into these main sources. We get taxes, which may or may not be restricted. We have licenses and permits, which are often designated for the people that carry out those functions related to them. We have fees and charges. Again, in fees and charges, the expectations are, if I pay you a fee for a service, that's where that fee is going to go cover the cost of those services. Grants are restricted to what the grantor has approved those expenditures to be. We have state shared revenues. These are revenues that literally the state has the authority to raise, and this would be like liquor tax, the liquor excise tax, marijuana excise tax. Those are not city taxes, those are state taxes. And so the state has a sharing percentage that they'll share with the cities, and so they get passed to us. Some of those are restricted, some of them are not. And then we get miscellaneous revenue sources, interest, rents, those kinds of things. And again, we can get debt proceeds. It would be the last source of revenue that the city would normally be entitled to get. So operating budget, then we have the spending. So what services does the city provide? Again, there's a lot of citizens out there that are unsure as to what it is that the city provides versus other governmental organizations that are in the area. So this is just a list of the types of services that our city provides. Okay, so we have a budget process, and that goes through about half the year. So, and actually, finance starts in about April. So it is a major process to keep track of our approximate 3,000 account numbers and figure out and to analyze all that activity and to turn it from data into information. So we start out, again, with the capital process, and that starts in July. Hopefully we try to get our capital adopted in July so that we can move on to our operating budgets. So finance creates a baseline budget about the middle of July, and we provide that out to the departments. So the baseline budget includes basically what we spent last year, plus all the increases in the contracts that are in the union contracts and the personnel steps and automatic increases. We put those into there so we can see what that impact is. So it's really kind of non-discretionary. And then once we get that picture, we put that out to the departments, and the departments look at that and assess what may be new or different that needs to be adjusted to that baseline. Any new service requests, new positions, new programs would come forth and be assessed at this point in time. Then once we get all of those requests, looking at the financial impact of that, that goes to the city manager for review. And the city manager assesses all that information and makes some decisions. And based on that, we bring a version to council then for the city council's budget retreat. The budget retreat's usually the first or second week of August. So this is where council kind of gets its very first view of kind of the update for the current year, what's happened in that first 6 months of the year. And based on that, they can start planning on and seeing what they might need to do as far as decision making for the next year. Then this year we had, after the budget retreat, there was a citizen advisory committee, so they met and heard about the budget, had a chance to express their views, and then we had a public hearing for the city manager's preliminary budget. So we took any information from the citizen advisory committee and the council retreat to further refine the priorities and the amounts that are included in the budget. And that was what happened on October 20th. And that was the public hearing for the city managers, and that's called the preliminary budget. On November 10th, we had a public hearing, and that was on the council's version of the budget. So any changes to this October 20th that council may have wanted to make, that would be instructed, and finance would pick that up and include that then in what's called the final budget. So also on November 10th, we had the property tax levy. So based on our needs and based on the needs and the assessed value changes and the other information, we calculate what our levy for the next year will be, and that goes to council for discussion that usually the same night. And then the next process is, even though it's called the final budget, if council doesn't come to a consensus on that one, they can continue to meet until December 31st if they like, but they are required by state law to pass a budget before the end of December. Okay, so that's our planning and our budget. So once we've done that, we actually have to keep track of what happens. And that's the accounting function that finance performs. So we've done the financial planning, the budget, and now we're on accounting. So keeping track of all of our revenues, it takes an extensive accounting system to do that. And keeping track of all the restrictions are very important, and that's what makes governmental accounting a little bit unique and different than the private sector accounting. Again, the revenues are often restricted, so they're not available for uses, so we have to track and ensure that the revenues are used in conformity with those restrictions. Again, we've talked a little bit about these. Some of the taxes that are restricted, our motor vehicle fuel tax is restricted, our real estate excise tax are restricted, and sometimes our other taxes are and sometimes are not. So our property tax is not restricted, but some of the sales tax money that comes in is restricted and some of it's not. Grants and donations are always restricted, and we need to have controls in place to make sure that money is spent according to the way the grantors and the donators gave us that money, and they expect it to be spent the way that they have specified. And then debt proceeds are restricted by the debt agreements. So in order to help us keep track of all these restrictions, we used fund accounting, and that's, again, a governmental concept. So funds basically are like its own little business, its own bank account. It has revenues, it has expenses, but what makes it really unique is it has its own cash. So its own cash, its own receivables. So even though we're one city, we have many different funds. And so a fund is sometimes used to control cash, and it's usually that's a good definition or a good indication that we need to have another fund is when we do need to control the ins and outs of those cash. So we have our general fund, and basically a general fund is used for anything that's not any of the other types of funds. So it's the catch-all. That's the only one what we are required to have is a general fund. You are not required to have any of those other funds. Those other funds are strictly at our convenience. So we have special revenue funds. So in our case, those examples of that would be our street operations fund, our paving fund, our Redondo zone fund. Those are examples of revenues that come in that are restricted for a special purpose, and they are collected and spent for those purposes in these funds. We have debt service funds. That's where money is accumulated and set aside in order to make our debt payments on time. We have capital funds, which handles all those restricted capital sources we were talking about, and also the spending. Then we have an enterprise. We have two enterprise funds, the Marina Fund and the Surface Water Management Fund. So the difference between an enterprise fund and all these other funds is that the accounting purpose of having this is so that we can actually control and account for the full cost and recovery of that operation. So unlike these others, these funds hold their own assets, and they have the intent is that the revenues are to be sufficient to cover the capital asset replacement of those activities as well. So the general fund, the police department doesn't have, we don't keep track of all the assets for the police separate. It all gets kind of commingled. But when you're in an enterprise fund, you're keeping all the assets and liabilities related and the debt related to these activities together. And the intent is that you're raising revenue that's going to cover the full cost of these operations.
Danielle, I need to interrupt you. I need to make a motion to extend, and this has to include the balance of the meeting because the executive session is part of it. So my motion is to extend for 30 minutes.
10:30?
To 10:30.
Second.
All those in favor, raise your right hand, say aye.
Aye.
Motion passes. Please continue.
Okay, and so then the final type of fund is our internal service funds. So these are funds that serve the other portions of the government. So in our accounting system, we have approximately 18 different cashiering points at 7 locations that finance balances every day. We have 36 different accounting funds and 3,615 active accounts. So there's a lot of systems, there's a lot of funds, there's a lot of places for us to keep track of and make sure that all that information is kept up to date and accurate. We run the systems that pay our vendors, they pay our employees. We bill for our receivables, our LIDs, parks and marina billing systems, and we keep track of all the capital assets, the debts, and the investments. So that brings us to part 4, which is the reporting. So once we've kept track of all of that, we have an obligation to report that. So we have to report that just not any way that we feel like or any way that we think is right, but we actually have national standards. So there's an organization out there called the FASB, which is your Financial Accounting Standards, which sets the standards for all of the private accounting. And we in government have a thing called GASB, which is the Governmental Accounting Standards Board. So this is the board that sets the rules for how we keep track of our information. And the goal of this is to create comparable financial statement information across the country. So everybody's playing by the same rules, so to speak, so that when users read the financial statements, they all know that they're using, that the definitions are similar and that they can compare one city to another because their accounting rules are being used are the same. And the GASB's intent is to change these standards every 10 years, and they are on track, and they are changing. And we have like 5 new ones in the next couple of years. So the reporting and stakeholders, that's about who cares. So who uses our financial statements, and why do we create financial statements? We do it because the public has a right to know. It's transparency in government. The other is the creditors. Basically, when people loan us money, they want to have some assurance that we're going to pay it back. So they need to look at the viability and the ongoing viability and sustainability of the government before they lend money to you. And then management. We use these financial statements. We use them to help make better management decisions, priorities, and to identify trends. So also, the other stakeholders in setting these national standards are accounting scholars and standard setters. They like accounting theory. They have a lot of theory about how this should be. And to kind of offset that perspective, we also have financial statement preparers and auditors that live in the real world that have to make this all work. And so these groups all come together and they all report to the GASB to provide information that affects how the accounting standards and rules are created and enforced. So our financial statements focus on the past. That's a basis of accounting, and the reason we use the past is it's not always the most relevant, perhaps, but it's verifiable. Nobody's going to argue over it. If I pay a bill, I know what that cost was. Other bases are, fair market value costing. Okay, that takes judgment. That's inconsistent. So even though, and that's part of the theory here. So in order to be verifiable and that auditors and that two people can come to the same conclusion in looking at how these things are being recorded, we use a historical basis. We look at what we spent. So some of the things that GASB doesn't prescribe is the financial forecasts. These are forward-looking. These are subjective. And so those are not subject to the prescribed rules at this time. They keep talking about it, but they do not prescribe rules. So how I do that 5-year forecast, those are under my definitions. There are no standard definitions to use when we prepare those kinds of reports. The budget report, again, it's not prescribed. GASB is very good about providing us information about suggestions about how to do it, but that's not prescribed. Performance report, they talk about that. That's how effective government is being. Okay, so that is not prescribed. Okay, then the final part here that I want to talk about is we're into the audits and internal controls. So this is how we make sure that what we've accounted for and what we're reporting is believable and trustworthy. So how do we know that those numbers on the statement are reasonable? And can we just believe them? And the answer is, well, we certainly hope so, that you can. And as a preparer of the financial statements, I'd like to think that they are. But when the auditors come in, they're not verifying every transaction. They're not saying that these statements are 100% accurate. Okay, what they're saying is a reasonable assurance that an informed party is not going to be misled by those statements. And so we pay an auditor, we pay him $53,000 to $55,000 a year. That's a lot of money. So how come they can't tell us these things are absolutely right? And it's because if they actually had to audit all the transactions that we did, they would be in here a year, because you got to remember it took us a year to record them. So if they had to audit everything, it would be very, very expensive. So they use a variety of approaches and tools to test transactions on a sample basis so that they have something that they can base their opinion on, and they give an opinion on the financial statements that says they're reasonable. Okay, they're not absolute, but they're reasonable and they're not misleading. So the state auditor's office comes in and they actually do 3 audits for the city every year. Okay, they do a financial statement audit and they do a combined federal grant audit. So so each grantor agency doesn't have to come in and audit the city separately. They kind of like hire the state auditors to do it all for them. So they do a combined federal grant audit. And this is a lot of this is a compliance audit. So there's a lot of federal rules, and they're in here to make sure we're following all of them. And then we have an accountability audit. So this is a city-level accountability. So this means, this is just federal grants. This looks at the whole system of the city. And again, they can't look at all of the city every year. So they select certain areas that they're going to focus on and test. And what they're looking for is, what are the city's procedures? What are the state laws? And for that area that they're testing, does it look like the city's following all those rules? So that gives some assurance as to, again, that the staff is following the rules and they're just not doing whatever they think is right. So generally the auditors are on site from March to July of every year. We have a desk for them. And then I just wanted to point out, we used to also have an audit for the Transportation Benefit District, and the last one, but since we absorbed it, we've had our last audit, and they were charging us $5,500 for that. So the last area that I want to talk about is internal controls. Internal controls are a very important part. They're the reason that the city manager can sign that financial statement and say, and that yes, he has confidence that these are right. Now, is it because he sat down and created those financial statements? No, it's because he's in charge of a staff and a system that has internal controls in place. And when internal controls are adequate, then people can rely on the outputs of the system. So what are internal controls? And basically, they're all the controls, and they're not just financial. They're all the controls that the city puts in place to make sure things happen the way they're intended to. So operations, the focus is so operations are running both efficiently and effectively. The financial reporting controls are the ones we probably most often think about when we hear internal controls. But they're also focusing to make sure that we're good stewards of the public resources, that things are not being stolen, or that actually or our streets are being taken care of. That's being a steward of our public resources. So do we have plans in places to take care of the long-term renewal of our assets? Those are all part of internal controls. And then we have legal compliance. So internal controls, it used to be thought often that, internal controls, that was an audit thing. That's the auditor's responsibility. Well, that was up until Enron happened, and I don't know how many of you remember Enron. But when the private companies started folding because it was a house of cards and their financial statements weren't reliable, and everybody signed off on them, so they must have been right. They were audited, and they must have been right. And what it did was it brought the focus on how do we know the people who are saying things are okay? How do they have a reasonable basis of assurance to know that they're okay and that they're not just saying it? And so that was really nationally, private and government. It really changed the focus, and it was very clearly declared that auditors are not responsible for internal controls. Management is responsible for internal controls. They are the ones that are in the position of being able to control what people do, what employees do, and how they do it. It's management's responsibility to make sure these controls are in place. So then what's council's responsibility? So council's responsibility is to make sure that management's carrying out their responsibilities. Okay, so the example that they use in training class often is if you have a high school student who's learning calculus and you're the parent, it's not your job to know how to do calculus and to check that student's work, but it is your job to make sure he's done his homework. Okay, so it's not that you have to know what all the internal controls are and what they should be in the city, but it's your job to make sure that staff knows what those internal controls are and that we are carrying out our responsibilities in the city. So yours is a monitoring role. So there's some inherent limits on internal controls. Again, internal controls are all the things that you put into place to make sure things go right, the way that they're intended to go. But there's cost and benefits. So you can put a lot of controls in about keeping track of $20 petty cash. Okay, but you don't want to spend $100 tracking, make sure $20 doesn't miss. So there is a sliding cost benefit, and that's just, again, something that usually the city manager has to evaluate those costs and benefits when he decides on what the levels of controls we're going to have in place. A limit on internal controls. So we can't afford a perfect system, is what this is talking about. And then management can override it. Management's making the controls, so management can override the controls. So that means that management can create fraud, okay, because it's within their authority and scope. So you have to, again, so it's not a perfect system. And then collusion. Most internal controls are set up so that if one person acting alone is trying to do something they're not supposed to do, it will be either prevented or detected, okay? But if you get two people working together, then often they're able to circumvent those controls. And again, so that comes back to the cost benefit. Most control systems are just not set up. It would be very expensive to try and set it up to prevent collusion. So those are some limits. So you put those in place to help you get to the outcome that you're looking for, but it's not perfect and it's not a guarantee. And so I think this is my last slide here. So this is the internal control structure. These are the 5 elements that go into creating an effective internal control structure. One is it's the control environment. Is management knowledgeable? Is it committed to an control environment? And does it communicate? So you can have the best controls in place, but I can sit here as a finance director and say, these are the controls, but if I don't tell anybody or people don't know how to or the employees don't know what they are, then they're not going to be effective controls. So then, as part of having a good internal control system is to have a risk assessment. So you need to be aware of what the risks are in the environment. So inherent risks are when things change. Whenever things change, it's more likely that something's going to go wrong. So when you're working on things with change, you put steps in place to deal with that risk. If things are complex, it's more likely to go wrong, harder for people to know what to do. So they'll make mistakes. So you have to plan for those kinds of things. Cash receipts, by their nature of cash, is inherently risky. So those cash tend to have more controls around them. If you have an area that has prior problems, and if they don't respond to those problems, then that's going to create a higher risk environment. And then control activities are those activities that you put in place to prevent and to detect and alert management when things are going wrong. Again, information and communication, if people are not talking with each other, then you're not likely to have a very strong control environment. And then the last place is you can monitor. You can put something in place, you look at it for a while, it's working, but if you don't go back and check it in a year, then you don't know. Over time, controls tend to decline if they're not monitored and reinforced. So, city finance takes a team. It takes council, it takes management, it takes employees, it takes the public. Everybody working together has a role in managing the city's finance. And that concludes my presentation.